I feel like we haven't done this in a while. When was the last time we did it?
Has to be like over a month.
A month ago,
months.
yeah.
But we used to do it more often.
Well, it started with you and Phil.
Yeah. That's when I was like
Phil?
22 years old. I was like 21, 22 years old.
Yeah. Now
Isn't that
you
crazy?
are Phil's age when you
Now
first started.
I'm a veteran now. I've been, practicing full time for over 6.
Yeah.
It's like at that point is when you're, pretty established, right?
Did someone just fart? I heard.
We got that on the clip. Someone just fart.
So what I wanted to talk
crazy.
about today is house hacking. What I have been noticing is that house hacking is working a lot better today compared to any time in the past 5 years. At the start of the pandemic, prices were high, even though interest rates were low. So the barrier to entry getting into the market was actually pretty high. There's 2 things that are stopping potential new homers from entering the market. The first is the capital required to buy, down payment, closing costs, renovations, and the other one is the carrying costs, how much it costs to pay for your mortgage and your operating expenses. At the start of the pandemic, prices were high even though interest rates were low, and for both of those things, it was making it difficult for people to enter the market. And then afterwards, once prices came down in mid-2022, affordability was better from the capital standpoint, but because interest rates shot up,
Qualifications were really hard.
Yeah, qualifications was tough, and also just it's hard to carry a mortgage at such high interest rates, even though the price has dipped. But now interest rates have come down, prices have held steady and low, so it hasn't changed much from 2022, maybe even a little bit lower.
Well, there's one thing I want to jump in because you're absolutely right, but one thing about that early COVID period when things were going really high, interest rates were low, prices were going high, the toughest part of that situation was actually how many offers there were.
Yeah,
everyone was throwing
right.
offers on, and it was firm offers too. So no conditions. People were like, yeah, I don't need a financing condition. I don't need a home inspection. I'm just going to buy this property as is. So right there, a large portion of the potential buyers were just out of the market because people aren't come to do that, right?
That is very good point.
Not just was it a hard time to buy, but that, plus that demand, that crazy demand with so many people in the market, it made for a really, really tough time. And then midway through COVID, or like you said, 2022, 2023 even, just because of qualification purposes, meaning, interest rates were at almost 7% in some cases. And to afford that is just crazy. Like people couldn't afford that. So no one was buying at that time either. It was a really tough time. To house hack, your mortgage payments were so expensive that rents needed to be so high. And for the average house hacker, income is also an issue, right? If you think about it, people who house hack, usually doctors or established lawyers or people making well above 6 figures, they don't typically need to house hack or want to house hack. They're usually a little bit older, they have kids, they need more space, right? They're at a different stage of life. But the people that are just trying to get their first property and need some supplemental from like a basement tenant, those people typically are on the border of the 6-figure earners. Maybe they're high 5 figures or low 6-figure earners. That big interest rate, 6%, 7%, it would handcuff them. They wouldn't be able to even buy. So
yeah. Let's talk about the types of clients that are buying with us. Traditionally, I would say 90% or more of our client base are investors. They're buying purely for investment property, cash flowing, doing projects to get the value add lift. But more recently, our team has noticed more end users, people who want to buy to live in the house themselves. What have you been seeing?
Yeah, so a lot of the conversations I've been having lately have been end users or house hacker end users. Because I believe the prices have adjusted and there's a little bit of a downward trend still, and affordability is getting better, meaning interest rates are coming down. At the same time, we rarely see that. It's not common at all. Usually it's inverse, right? When interest rates go down, prices go way up, as we've seen historically. So the fact that both are coming down, I'm actually noticing a lot of people in their late 20s or early 30s that were like, I thought I would never be able to buy, but actually I'm pretty close now. Like I'm getting closer and closer. So that's a good sign for people in that stage of their life, because I know like we've had this conversation, and I've had this conversation with a lot of people in that stage, and it's very negative, right? They're thinking we're never going to be able to buy, and things are going up, and it's way too, it's not affordable anymore. But nowadays it actually is kind of adjusting a little. Keep in mind, this is all relative, right? properties are still $1 million. It's still very expensive to own real estate in Toronto, but the affordability is getting a little bit better. So if you do have a solid income, usually 2-income household it's going to take. So if you're at that stage and you have a fiance or you're getting married and you can combine your incomes and get a place, and then also house hack where you have like a basement tenant that could supplement your income, it's really strong. And right now the locations you can buy in are unheard of. Before you would need $200,000-$300,000 more just to get into there from a purchase price standpoint. So it is a really good time.
Okay, so how do you address the fear? We are still in uncertain times. We might enter a recession. We still have looming tariffs that might be happening still. The job market not being so good as well. If people are scared about something like that, what would you tell them?
So I've had people comment. Actually, last week I had someone comment to me and they said, is this, we see all your content. We see that you've said it's a buyer's market. It's a buyer's market. They're like, whenever we hear buyer's market, we think of your face because you're always saying it. But somebody asked me, they're like, is that your realtor cap on? Like when you're saying stuff like that, is that your realtor cap on? And I said, well, think of it this way. Like I can't convince you otherwise. My realtor cap's always on. I'm a realtor, so it is what it is. But I recently purchased. And my team
purchased.
Exactly.
Yep.
My team is purchasing as we're speaking. So I go, we're not talking the talk, we're also walking the walk. And if we're wrong, then we've actually invested all of our money, but we've invested a lot of money in this in the trend that we're seeing. So is it my realtor hat on? Yeah, of course, it's always on, but I'm also doing it. So I do truly believe it is a buyer's market. I mean, it's what we're seeing right now. So I could see the reaction of the people I was talking to. They were like, okay, that makes a lot of sense. Like the confidence is there then for you that you're doing this. And I said, yeah, you don't have to listen to me. Like do whatever you want, right? I'm personally doing this.
Well, let's just say this, okay? If someone were to buy a condo today, would you tell them to buy?
Would I tell them to buy?
Yeah.
Oh, that's a tough one. The easy, quick answer is no. But at the same time, and this is another conversation I had last week, is someone was saying, I think if I wait another year, maybe a year and a half to buy a condo, it'd be the low. And I said, maybe on averages, yes, you're right. Maybe the market will go down another 10, 15%, and it will be the low. But I said, what's stopping you today from dropping an offer that's 20% under asking and potentially picking it up? Is that not the low? Would that not still beat the expected low of averages in another year or two? So it all depends, right? The condo market, I would probably stay away from if you're buying averages or overpaying, for sure. I would say, hey, hold on, like there's probably worse to come. But if you're gonna just throw in extreme lowball offers and say, if I was to get it at this price, it's a no-brainer, then do it, yeah, for sure.
Yeah, I mean, so basically you're not telling people to buy everything, right?
No.
Only when the numbers make sense. And
Exactly.
on the freehold side, it makes sense. If the condo prices, if you can get a really, really good deal, it makes sense as well. So it's not, even if you do have your realtor hat on, the deal has to make sense.
The deal always has to make sense.
Yeah.
And that's the thing about timing the market is that I guess best case scenario is you time the market and you get the best deal on the market. Okay, if that happens, I mean, like, great. But most people don't do that. Most people just look at averages and then they buy average deals at the average time of the market. And if you're doing that, I mean, it's fine. Like, do whatever you want. But in this market, there's a lot of fear. And people aren't taking the stab at getting that home run deal and just dropping those lowball offers and seeing what happens, right? That's what you always want to do, no matter what market you're in, is you want to just take stabs at the top 5% of the deals on the market and see which ones you can land. And the one you land usually will blow your mind. And you'll say, I don't know how I picked this up. And even years down the road, you're going to say, look, the market adjusted. Maybe it went 5% lower. Maybe it went 5% higher. You're going to say, I bought a really good deal at that time. And you'll be happy with it.
Okay, tell me about the latest deal you helped a client buy. What is it?
Oh man, that was a really good deal. Yeah, so we bought a legal triplex at Bloor and Runnymede.
Okay, so great area.
It's a great location.
Yep.
Like really, really nice location. Walkable to High Park.
Yeah.
All the shops there. It's
Subway.
It's like a 30-second walk south of Bloor. So it's like a minute walk to the subway station there, Runnymede Station. That property has it all. Like it's really good. It has parking. It's already split into 3 units. Again, legal triplex, 2 bedrooms, 2 bedrooms, 2 bedrooms.
Good size too. It's not,
Great size.
one bedroom.
Great size. There's a giant extension on the back, like so spacious. The apartments are really nice, and actually, if you keep following me, I'm going to be posting those for lease in the next few months, so you'll be able to see them on the market. But they're very nice, very trendy units, very comfortable, because I believe there were about 800 square feet each for a 2-bedroom. It's quite significant. Beats the 700 square foot condo.
Oh yeah. When people meet with me, they're like, with so many condos coming onto the market, don't you feel the crunch on the freehold side? I'm like, well, the type of asset, the type of units are very different. We don't have shoebox size, or we try not to make shoebox size units, right? We have 2 bedroom,
some people
800
do.
square
I
feet.
won't say who, but some.
No one there.
Larissa.
No. Okay, anyway.
No. The biggest, so like we were saying earlier, the property was actually listed for $1.5 million, and previously, so earlier in the year, and I believe even last year, it was listed for much higher, and obviously it didn't sell. But for a legal triplex at Runnymede and Bloor, so this is one of the most prime locations you're going to find in the city, like walkable to High Park, we had the opportunity to negotiate and go in with an extreme lowball, right? So we offered $150,000 under asking, knowing that the comps and everything else going on in the market, that would be like a steal territory for that location and that asset itself. And they came back to us at 1.4, and we sort of worked our way down to 1.385. So, $1,385,000 for a legal triplex in one of the best locations in the city.
Ready to rent out. That's amazing.
Yeah, slight, touch-ups like usually have to happen. But the rental budget's going to be, maybe $20,000, $30,000. Nothing significant.
Right.
And again, this is relative speaking. So if you're hearing this and you're like, $30,000 is a lot.
We normally take on conversions where we put in 200 grand.
Yeah.
Just for
these are
purposes.
small. Yeah. This is actually in the turnkey category, in my opinion, where I tell clients, under $20,000.
You should expect it as a homeowner, house owner, right?
Yeah. And this is why homes are. We were talking about this earlier today. When people are upset about landlords or owning property, do you have the money to change a roof? And do you have $15,000, $20,000 to do that? Do you have that money if there's a flood in the basement to fix it?
And you have to deal with the stress, all of the coordination with.
The stress is another thing, but seriously,
well.
Do you have that money? Do you have the money? Because the materials and the labor is so expensive. Like windows, are you going to replace windows when they need to be replaced? This is a significant chunk of cash that a lot of people can't afford, unfortunately. It is what it is. So maintaining these properties is a big task. And if you're up to that, then yeah, of course, you should get the value of that property that you're maintaining. I mean, it's yours. You're providing a service. You're providing a good that people could use. So yeah, it makes total sense. And if you can't afford that stuff, well then, that's where the rent.
That's why you rent.
That's why you rent. And if your goal is to afford it, then there are ways to do it. And take some time, take hard work and a lot of saving and good bounces, of course. You have to have a good bounce here and there. I'll admit I've had a lot of good bounces happen to me and been in the right place at the right time and made some good decisions, but very grateful for that. But yeah, it is a very expensive project to take on. So.
Okay, so you bought for 1.385 and it's going to be 3 units, 2 bedroom, 2 bedroom, 2 bedroom. What are your rents? What are your expected rents going to look like?
So in that location, it's a little bit of an outlier because it's so nice. So we usually work on averages and whatever we tell our clients is usually, I'm very conservative with the numbers, but usually it's on market averages. So the market average for a 2-bedroom in that, not in that area, but let's just say in general, would be about $2,400 to $2,500 per month. So it would be $2,500, and then for the basement a little bit less, maybe $2,200, something like that. Now, given the location, it's super prime, and the units are very nice. So a little bit higher than that, we're probably targeting around the $2,700 mark for each unit, and the basement maybe $2,300.
How do the cash flows crunch out after you pay for your mortgage?
Yeah, they're quite strong on this property. So this one is projected to be around $1,500 per month cash flow positive. If you look historically speaking, like I said, 6-7 years ago when I got into the industry, if you were looking at a turnkey triplex, you're looking at breaking even practically. Or maybe slight positive cash flows.
I would say, turnkey, multiplex, you are expecting close to break even. The reason why we take on projects is to bump up the cash flows.
Exactly.
Right?
But nowadays, you're finding a lot of these more turnkey type properties that are cash flowing very, very strongly. So I remember I had a conversation with somebody in the office about this recently as well. And we were saying, why buy a turnkey versus a big project?
Yeah.
And that's an actual question to ask these days, because now for the first time in my memory, there are turnkey possibilities that are performing almost as good as the big projects. On some cases, they're just as good. So yeah, in that case, why take on that work? Why pay $150,000, $200,000 and do this big project? I mean, it's all case dependent, but again, on averages, if you can find a really good turnkey property that cash flow is high, do it.
No, I agree. I mean, the range is so big these days. We are seeing some neighborhoods where a project you might buy for $800K, and then once it's renovated, the market value is $1.25 million, and that's when the renovations make sense. But then also in other neighborhoods, the spread between unrenovated and renovated properties is just the amount that you put in for construction. So yeah, lots of different types of properties to rummage over, and you just need to make sure that the deal makes sense for your specific property.
100%. You're pretty much on the frontier of all the questions we get. Like everybody asks you, hey Samantha, what's going on? Is now a good time? What's the question that you've been getting the most lately?
Okay, so a lot of people are coming to me trying to figure out what's happening with the market. They have the capital. It's currently parked in another liquid investment. They want to invest, but they're hearing a lot of news headlines where it's scary. They're like, oh, home sales reached the lowest point on record, basically, right? And then they're seeing the job numbers being very weak, recession fears, tariffs, and things like that. So they just come to us trying to figure out when is a good time to invest.
It's the opposite of FOMO.
Yes.
What's the
term? So FOMO is
fear of missing out.
Yeah. I don't know what the opposite term is.
Fear of
overpaying,
buying, jumping in. I don't know. Yeah. No,
that's what it is.
So there's no FOMO right now. So a lot of people are getting that hesitation and they're waiting. And what's probably going to happen, now I'm on record saying this, I don't know, this is my opinion, is that when that bottom is reached and everybody kind of clues in now that now's the time, the FOMO is going to jump back in and people are going to start bidding each other up again like we saw years back. I don't think that's going to happen anytime
But if you're waiting,
soon,
so if you're waiting for headlines, you need to make sure the data shows it, and then the news reports it after the data shows.
Yeah.
So
There's always a
technically,
lag.
there's a huge lag. You need to wait for a few months of data to show it first, to validate it. And the data comes out a month after it happens, right?
Yeah.
So you're looking at 4 to 5 months of lag.
You can never actually, by data alone, know when you're at the bottom until you're out of the bottom.
Exactly.
Because you have to see the trend go up and be like, oh, that was the bottom. So like you said,
So
there's
we're here,
lag. Yeah.
And then
it
might be at the same point, but the market conditions would be much different because we would be on an uptrend, right?
Exactly.
Like you said,
and then the FOMO kicks in and people. So usually it spikes up. We're not saying that's going to happen now. We're not trying to scare people.
No.
But that's typically how bottoms of the market tend to go. But let's wrap this up. Yeah, it was nice talking again after so long. We haven't had a long form discussion like this in so long. So it's nice. We should do it more often.
Yeah, maybe in a month before you go to Greece.